All right. So are you ready to jump into this? We're doing a deep dive into IndusInd Bank today.
That's good.
You sent us a ton of information on them,
Yeah.
financial snapshots, some historical data, even credit ratings and con call transcripts.
Wow. That's a lot.
Yeah, it is. We're going to go through it all, and hopefully it'll all make sense when we're done.
I'm excited.
Me too. Okay, so first off,
Yeah.
did you know that IndusInd Bank was actually the very first
How was it?
private sector bank in India
I didn't know.
back in 1994?
Wow.
That was a really big deal.
Yeah, I bet. I mean, back then the banking scene was dominated by
Right.
state-owned banks.
Yeah.
So IndusInd Bank kind of like, I don't know, burst onto the scene. And I feel like they really helped the whole financial sector just like modernize and open up,
Yeah, absolutely. And they started by specifically targeting the NRI community
Oh,
for
interesting.
non-resident Indians.
Okay.
So what was the reasoning for that? What was the story there?
So the thing is, NRIs had certain needs that weren't being met by the existing banks.
Right.
And IndusInd Bank saw that gap and created services specifically for them.
Oh, okay.
Smart move, right?
That is a smart move.
It really helped them build a loyal customer base and make a name for themselves, especially in that segment.
That makes sense.
Yeah.
Okay, let's get to the fun part.
Good.
The key point section says, over the last 5 years, IndusInd Bank has seen profit growth of 22.1% CAGR.
Wow.
That's a lot of growth.
Yeah.
What does that tell us about their position in the market?
I mean, it definitely puts them among the top performers in the private sector,
Okay.
which is no small feat in such a competitive market.
No, definitely not.
But the con section lists some things we should probably talk about, too.
Okay, yeah, the low interest coverage ratio is a little scary sounding.
Uh-huh.
And then we've got low promoter holding coupled with a lot of contingent liabilities.
Yeah.
So can you break down those contingent liabilities for me? Like, what does that even mean?
Okay, sure.
It says 16,075,077 crore.
Oh, wow.
Is that even real money?
It is real money.
Okay.
Okay, so think of it like this.
Okay.
Imagine you co-sign a loan for a friend.
Yeah.
That's a contingent liability for you.
Okay.
If your friend can't pay, you might be responsible for the whole thing.
Right.
So scale that up to a bank guaranteeing loans for tons of people and businesses,
Oh.
and you start to get the picture.
That makes sense.
So in IndusInd Bank's case, the size of those liabilities is something we should look at carefully.
So potentially good growth, but with some potential risks too.
Yeah, that's a good way to put it.
Got it. Okay. Now, what about those pledged holdings by the promoters? It's like 45.5%.
Whoa, that's a lot.
Is that normal, or should we be a little concerned about that?
It's not unusual for promoters to use their shares as collateral for loans.
Right.
But that high of a percentage
Yeah.
does raise some questions.
Okay.
It might mean they're facing some, headwinds themselves.
Right.
We need to do some more digging to figure that part out.
Okay. Time to put on our detective hats.
All right.
Let's move on to the quarterly results.
Okay.
The revenue growth looks pretty steady, and then, bam,
What?
huge jump projected for the March 2024 quarter.
Huh.
What could be fueling that?
I'm not sure. Maybe a new initiative or a product launch?
Possibly.
Maybe even an acquisition.
Oh, interesting.
We'll have to see. To understand it, we need to look into their recent announcements and con calls,
Okay, so maybe some clues there.
hopefully.
One more thing in the quarterly results that I wanted to mention.
Okay. What?
The financing margin percentage,
Uh-huh.
it dips so dramatically sometimes and then recovers.
Oh, yeah.
What does that tell us about the bank's health?
So that financing margin, also called the net interest margin,
Uh-huh.
it's basically the difference between what they earn on loans and what they pay out on deposits.
Okay.
It's a key indicator of their profitability.
Okay.
Those swings could be because of changes in interest rates, or maybe competition in the lending market, or even shifts in their loan portfolio.
Makes sense.
We might find some clues in the announcement section.
All right, so strong profit growth, but with some potential bumps in the road.
That seems to be the theme so far.
Yeah, it does. Speaking of bumps,
Yeah.
let's check out the shareholding pattern. It
Yep.
looks like the shareholder classifications have changed since September 2022.
Really?
Yeah, so why should we care about that? Why does that even matter?
Well, the shareholder makeup can tell us a lot about the power dynamics within a company
Okay.
and potentially, where future decisions might be swayed.
Right.
In IndusInd Bank's case, these changes highlight the roles of foreign institutional investors, the SIIs,
Okay.
and domestic institutional investors, the DIIs.
Okay, I'm going to need you to break that down for me.
Of course.
Yeah.
So think of it like this.
Okay.
FIIs are like the global players.
Okay.
These are your foreign pension funds, investment firms, that sort of thing.
Right.
DIIs are more like the home team,
Okay.
domestic entities like your mutual funds and insurance companies.
Okay, so why do we need to know who's investing? Does it matter if it's foreign or domestic?
It matters a lot.
Okay.
Their decisions can impact the company's stock price, even its overall performance.
Okay.
Like, a big chunk of FII holdings could show global confidence, but it could also make the bank more sensitive to global market, like tremors,
Oh, okay.
DIIs tend to bring more stability.
Gotcha.
They have a longer-term perspective usually.
Makes sense.
So seeing the balance between the two can help us gauge the bank's risk profile and growth potential.
This is getting interesting.
I know, right?
There are also all these documents, the credit ratings, annual reports, those con call transcripts.
Yeah, it is a lot.
What can someone really gain from diving into all of that?
It's like you have all these different lenses to examine the bank.
Okay.
The credit ratings from agencies like Crystal, Fitch, and CARE, they'll give you an outsider's perspective on their financial strength.
Okay.
Helps you figure out how stable and risky they are.
That makes sense. And what about those con call transcripts?
Oh, they're not as scary as they seem.
Okay.
Think of it as like a direct line to the management team.
Okay.
Reading through them can give you a good feel for their thought process, how they see the challenges, the opportunities, their plans.
It's like peeking behind the curtain. Having all this different information, the numbers and the insider insights, really helps paint a more complete picture.
That's why these deep dives are so great.
Totally.
You can connect the dots, ask the important questions.
Absolutely. And I'm realizing this goes way beyond just IndusInd Bank.
Oh, yeah.
These skills can be applied to any company or investment.
Absolutely.
It's about being a critical thinker and wanting to learn
I agree.
so you can turn data into real power.
Yeah. You got it?
One piece of data we haven't talked about yet, the dividend yield.
Okay.
Screener lists it at 1.62%.
All right.
What does that tell us about IndusInd Bank? Is that good, bad, in between?
So the dividend yield shows you the annual dividend payout per share
Right.
in relation to the share price.
Right.
A higher yield can be appealing for investors who are looking for income from their investments,
Okay.
but it's important to consider their track record with dividends,
Gotcha.
their stability,
Right.
and their prospects for growth.
So a high dividend yield may be tempting, but it's not the whole picture.
Right. It's just one piece of the puzzle.
Gotcha.
Like a company with a high dividend yield but shrinking profits might not be a good investment for the long haul.
I see.
It's all about finding balance
Absolutely.
and figuring out your own investment goals and risk tolerance.
Makes sense. Before we move on, I want to circle back to that projected revenue spike in the March 2024 quarter.
Yeah.
Are there any, red flags or warnings we should be thinking about as we consider that projection?
That's a great point. So while a spike in revenue is definitely exciting,
Yeah.
it's really important to understand what's causing the growth.
Okay.
We need to figure out if it's sustainable or a one-time thing,
Right.
if there are any risks hiding that we're not seeing.
Like what? Give me an example.
Well, say that revenue spike is tied to a specific acquisition.
Okay.
We'd need to examine the financial health of the company they bought and see how it's being integrated into IndusInd Bank.
Right.
That could show us some potential problems.
So we need to make sure that spike's built on solid ground and not just a temporary boost.
Yeah, exactly.
Okay.
And we need to see if the growth aligns with their overall strategy.
Right. Like, is this a part of a bigger plan or are they going in a totally new direction?
Exactly. So don't just celebrate a revenue increase without understanding the bigger picture.
Got it. Don't get swept up in the excitement.
Right. Be a critical thinker.
Awesome. Okay, this is a good place to pause for now.
All right.
We've covered a lot.
We have.
IndusInd Bank's beginning as the first private sector bank in India,
Uh-huh.
financial ratios, shareholders, all kinds of things.
Oh,
I feel like I'm starting to piece it together, but I'm sure some of your listeners might be feeling a little overwhelmed.
yeah, I bet.
What's the most important thing you want them to take away from this?
I think the main point here is that understanding something as complex as a bank is a journey, not a destination.
Okay.
There's always something more to learn, to question.
I like that.
What we've done today is give you the tools to start that journey.
Like, we've given them a map and a compass to go explore this financial landscape on their own.
That's a great way to put it.
So what's one last question you want to leave our listeners with? Something to think about as they continue their deep dive.
Okay, so considering everything we've learned, is IndusInd Bank a company that's going to keep growing,
Uh-huh.
or are there just too many risks?
Ooh, that's a good one. That's really going to get them thinking.
I hope so.
Yeah, it's up to each of them to decide.
Right.
And that's the beauty of this,
Yes,
right?
it is.
It's not about finding the right answer. It's about figuring out your own perspective.
You're exactly right.
And that's what we try to do here.
It's been great.
Yes, it has.
Picking up where we left off with IndusInd Bank. It's fascinating how their journey really kind of reflects how India's whole financial landscape has evolved.
Yeah.
You know, from being the first private sector bank to really focusing on the NRI community.
Right.
They've definitely carved out a unique space for themselves.
Yeah, and they've seen some impressive growth,
For sure.
22.1% CAGR over the last 5 years.
That's a lot.
It really shows they're a force to be reckoned with,
Yeah.
but we can't ignore those potential risks.
Yeah, we talked about that.
Well, it's almost like two sides of the same coin, you know?
Definitely. That's what makes this deep dive so interesting, right?
Right.
That tension between the good and the bad.
Yeah.
So remember that low interest coverage ratio?
Yeah, a little bit.
That's something we need to keep an eye on.
Okay.
It kind of suggests that they might be a bit vulnerable.
Oh, what?
Well, like economic downturns or maybe unexpected events, things like that.
Okay, so a low interest coverage ratio basically means they're cutting it close when it comes to those interest payments?
Yeah, pretty much.
Makes sense. How do we know if it's a serious problem or just a temporary thing?
That's where we look at the trends.
Okay.
Is the ratio getting better or worse? We can check the historical data, see how it's been moving.
Cool. Right.
A ratio that just keeps going down,
Yeah.
that's a lot more worrying than just a small dip.
Right. So trend spotting is key.
It is.
Okay. Now, those contingent liabilities, those are huge.
Yeah.
I mean, it's hard to even imagine how much money that is. 16,075,077 crore.
That's a lot of zeros.
How worried should we really be about that?
It's definitely a number you can't ignore.
Okay.
Remember the analogy we talked about before? Like co-signing a loan?
Yeah, for fun.
Exactly. Well, imagine your friend's this huge corporation, right?
Okay.
And you're not just co-signing.
Uh-huh.
You're basically guaranteeing a huge chunk of their debt.
Okay.
So if things go bad for them, well, you're in trouble.
That's a scary thought.
It is a bit, right? So in this case, we need to figure out how much those liabilities could actually impact the bank.
Okay, how do we do that?
We can check out those credit ratings.
Okay.
Agencies like CRISIL, Fitch, and CARE,
Right.
they look at those contingent liabilities,
Okay.
and then they rate the bank's financial strength.
Gotcha.
So their ratings help us understand the risk,
Makes sense.
like having a financial watchdog looking out for us.
I like that. What about the con call transcripts?
Oh, yeah, those can be helpful.
You said they can give us a glimpse into the management's thinking.
They can. We want to see how they talk about those liabilities. Are they just brushing them off?
Right.
Or are they acknowledging the problem?
No.
Do they have a plan to deal with it?
Right, like a solid plan.
Exactly. Or are they just crossing their fingers and hoping for the best?
So we're looking for honesty and transparency.
We are.
It's like reading between the lines.
It is. So we're looking at trends, we're checking those ratings, we're reading those con calls.
Right.
Anything else we should be doing to really assess those risks?
Yeah, that's a lot.
Well, it's also helpful to compare
Okay.
IndusInd to other banks in the sector.
Okay.
See how their contingent liabilities stack up.
Against the competition.
Right. Are they way higher or are they normal for the industry?
Okay. So it's all relative.
It is.
If everyone's in the same boat, maybe it's not as bad.
Exactly. But if they're way out there,
Then that's a problem.
it is something to look into.
I'm starting to feel like a financial detective over here.
That's the spirit.
Mhm.
But we also need to remember the positives.
Oh, yeah. We can't forget about that growth.
Exactly. That revenue spike we saw for March 2024.
It's a big one.
We need to figure out what's causing it.
Great. And if it's something we can count on,
Yeah. Is it sustainable or just a one-time thing?
how can we tell?
We can look at the bank's announcements,
Okay.
press releases.
Uh-huh.
Have they bought any companies,
Okay.
launched any new products or services?
Right. Things that might explain that spike.
Exactly.
Okay.
Are they entering new markets or expanding their operations?
So basically, are they taking concrete steps to actually back up that projected growth?
Yeah, we want to see action, not just
Yeah.
hopes and dreams.
Gotcha.
Those con calls can be helpful here too.
Yeah.
What are they saying about their strategy,
Right.
their future plans?
Are they confident?
Exactly.
So it's like a puzzle. We're piecing all these clues together to try and see the whole picture.
It is. And speaking of puzzles,
Yeah.
remember those shareholder changes we talked about? The FIIs and the
Yes,
DIIs?
those are confusing.
So basically, it's about figuring out who's in charge, right?
Okay.
Like who's really driving things.
Gotcha.
An increase in those FII holdings could mean global confidence is growing,
Okay.
which is good,
Uh-huh.
but FIIs can be a little flighty, you know?
Oh, okay.
They might pull out quickly if things get rocky.
So it's good, but it's also risky.
Yeah, two sides of the same coin again.
Right. What about the DIIs? What did they tell us?
The DIIs are usually more stable.
Okay.
They understand the Indian market really well, and they tend to have more of a long-term view.
So ideally, we're looking for a balance between the two.
That's the best case scenario.
Global interest, local expertise.
Exactly. But it's not just about how much they own.
Right.
It's about who they are.
Okay.
Are they good investors? Successful track record?
I see.
Do they believe in the bank's future?
So it's about the people as much as the numbers.
Yeah, definitely.
Yeah.
Investing isn't just about looking at a spreadsheet.
Right.
You have to understand the people,
Makes
the
sense.
stories behind those numbers.
It's starting to feel less like finance and more like an investigation.
I like that.
Yeah.
And this approach,
Yeah.
thinking critically, looking at trends, reading between the lines,
Uh-huh.
that's useful for anything, really,
Oh, yeah.
not just finance.
Wow.
Analyzing a business, thinking about politics, even just reading the news.
It's all connected.
It is. You become a better consumer of information.
Right.
You can make better decisions.
Absolutely. Okay, so we've covered a lot in this part.
We have.
We talked about risk, we talked about growth, we even dove into the minds of the management team trying to understand their perspective.
Right. But there's still that one big question, the one we posed at the end of the last part.
The big one.
Is IndusInd Bank a company that's going to keep growing?
Or are those risks just too big?
And that's what we'll be talking about in part 3.
Looking forward to it.
Okay, so we're back for the final part of our deep dive into IndusInd Bank.
Time to make some decisions.
We've looked at their history, their financials. We even tried to understand how the management team thinks.
We really went deep.
We did. So now the question is IndusInd Bank a good investment? Or are those risks too big to ignore?
Yeah, it's a tough one.
Right. So let's recap a little.
Okay.
They have a really interesting history.
Yeah, definitely a pioneer in the Indian banking scene.
The first private sector bank.
Right, and they really established themselves in that NRI market.
Right, and their profit growth has been amazing. Oh yeah, 22.1% Seg AGR over 5 years. So that's nothing to sneeze at.
No, it's not. But we have to think about those potential weaknesses, too.
Absolutely, those can't be ignored.
That low interest coverage ratio still makes me a little nervous.
It should. It means they might have trouble covering their interest payments, especially if things get shaky in the economy.
Right, and those contingent liabilities.
A lot of money at stake there.
It's a huge amount. It's hard to even grasp.
It's definitely a significant risk factor.
But then we have that projected revenue spike for March 2024.
That's the wild card.
Right. If that growth is real and sustainable...
It could change the whole picture.
Exactly, but we need to be sure it's not just a temporary thing.
We've been trying to figure that out.
Looking at their announcements, acquisitions, expansion plans...
All the clues we could find.
And those con call transcripts. We spend so much time with those.
Trying to get into the heads of the management team.
Do they seem confident? Are they hiding something?
The judgment call.
It is. You have to consider the human element.
Always. Are they being upfront about the risks? Do they have a plan?
It's like we're evaluating their character as much as their financials.
It's all connected.
And what about those shareholder changes, all those FIIs and DIIs?
Yeah, that's a big shift.
What does it mean for the future of the bank?
Well, those FIIs coming in, that shows global confidence.
That's a good thing, right?
It is, but they can also be unpredictable.
Right, they could pull out just as quickly.
Exactly. And then you have the DIIs, they're more stable.
They're the steady hand.
Right. They understand the Indian market. They're in it for the long haul.
So we're hoping for a good mix of both.
A balance is always good.
A little bit of global excitement, a little bit of local knowledge.
The best of both worlds.
That's what we like to see. But at the end of the day, we have to decide, is it a good investment?
That's the million-dollar question.
Should people buy stock in IndusInd Bank or stay away?
We've given you all the information we could find.
All the tools.
Now you have to make the call.
That's right. This isn't financial advice. It's about giving you the power to make your own decisions.
Empowering the listener.
That's what we're all about.
I think we've done a pretty good job.
I think so too. This has been a fascinating deep dive.
It really has.
We've learned so much about IndusInd Bank.
And about analyzing companies in general.
Absolutely. So, to all our listeners out there, thank you for joining us on this journey.
Happy investing,
Remember, knowledge is power.
especially when it comes to finance.
This is The Deep Dive. Signing off.